Hello, trading has closed on August 11th, 2022. Let's start with our disclaimer, as we always do. It's my trading plan for tomorrow, Friday, August 12th, 2022. Please remember, I can be completely wrong. Any trade you make should be at your own risk. Let's go over what we said. We had a number of things that were compatible with the top. I said that it wasn't enough for me to call it, but if we just moved up slightly, that would be enough. But if we were to gap up and go meaningfully over yesterday's high, that would kill the idea. So we gapped up, went meaningfully over the high. So I had a plan if we went up slightly, but didn't really have a plan if we went up a lot like that. And I sure didn't have a plan if we went up a lot and gave it all back. Now we called for the pattern with the early low, and that's what I think this is. Although if this were the only pattern, if this were the only day with this pattern, you could sure argue it was a day with an early high. We'll go over why I think it's not in just a minute. We get to cross an old target off the list, 42.1350. There's a new target, 42.2921. If we don't gap down smartly, the rules say that it'll print. MEJT said this move is false, said this drop is false, hasn't retraced yet. Well, these patterns repeat every 32 calendar days, and usually there's an early low, a rally, a midday drop, and a late high around this time. When there's a gap, far more often than not, the early low splits. So if you take the average of these lows, you get a time here, you get a rally, midday drop, and then a late rally. It should occur right at this time. Now, the usual way these things go is you go up all day long, and it's negative if you don't. But what's important isn't the direction, it's the times. And if you count this as a split, the times work. Everything gets pushed back because of the split. I went back and looked at this pattern every 32 days, and even though it has a reputation of being a rally day, an inordinate number of these days turned out not to be rally days. The times were the same as the rally days, but not the direction. So I'm going to have to make a note of that for the future. Well, there are just too many ways to count this. I'm not certain what's the right count. I have my 5 waves up here. This is one count. It certainly isn't the only one. I had a different one yesterday, and I'm not even certain that's the right count. But if that's gray A, and we have an A, B, C, the height of wave magenta C is equal to the height of wave magenta A. And if that's the right count, the height of black C is about twice the height of black A. Now again, just because that one works doesn't mean other ones don't. But since we have 5 waves up, we have to consider that a possibility. We also have to be aware of the 89-week moving average, which is resistance and tends to separate bull from bear markets. If this is still a bear, I think that bottom's going to hold, but doesn't mean you have to break through now. And if you do break through, it's convincing, it's more evidence this isn't just a rally on a bear, but it's a new bull. Well, I'm not really convinced of this count. Let's look at these 5 waves. We had this 1 and this 2. We weren't certain of the 3. The 4 looked okay. And if that's wave 5, it's equal to exactly half of wave 1. Let's focus in on this. Well, yesterday I was trying to count this as an ending diagonal triangle. That's too much of an overthrow for me. You can play around with this and you can talk yourself into 5 waves up. Or you could even make this 4 and that 5. I just think it looks like a forced count to me. That's why I put 2 question marks after it. Not certain it's right, but if it is right, we have an ABC down with C equal to A. And we also have a drop all day. We couldn't close under the late day lows, which is a positive pattern if it's maintained at tomorrow's open. But usually when that's negative like this, you get more negativity unless you gap and clear this high promptly, which to me seems like a pretty tall order. So we're going to use the mixed signals rules. Here they are. Commonest thing is a gap and prompt move outside the range. Otherwise you close a little change, like the big move Monday. Once in a while, usually a great while, neither one of those things happen. Well, tomorrow's pattern, I'm still calling the one with the early low. We could still gap up. Signals are mixed. It's bullish. There's a higher target. There's an ABC down with C equal to A, and we couldn't close under midday lows. If we don't gap down smartly, the rules call for the target to print. Target was 42.29.21. But it's bearish. Today's normally bullish pattern was negative instead. This should lead to lower prices printing fairly soon, even if we don't close lower. If we gap and promptly overtake the high of day, that would kill the pattern. Picture's way too muddled for me to trade tomorrow till I get more information from the early action. It's just not as clear as I'd like it to be. I can explain a move in either direction. That's not when I like to risk my money. So we're still calling this a pattern with the early low tomorrow. We're at resistance still. We've cleared resistance a number of times, and I'm not saying we're not going to clear it tomorrow, but it would take quite a rally early in the day to overtake this high. And who knows? I mean, anything can happen. And tomorrow has the early low, muddled picture. I'm waiting for the morning action to take any trades, and that's today's call.